Hello again, everyone. As weak stock and bond markets continue, amidst this environment of very high inflation, highest in 40 years, I'm sure you've read that or heard it, we're attempting to increase our communication just to keep you up to date. Now, in our last video and letter, we were starting out talking about some of these things, and since then, there's been some very positive developments that we wanted to share. Bear in mind, whenever we consider current conditions, we always encourage maintaining a long-term outlook, and we always consider your money in light of three key questions. Who's the money for? What's it for? When's it going to be used by? And at what rate will it be withdrawn at? So our planning process that we go through, that many of you have been in this year revisiting, help us to consider these questions while providing really valuable perspective on the current events, which usually leaves people feeling pretty encouraged because we're not seeing any long-term financial plans in any way falling short of what their original targets were in light of these downturns that we're seeing. With that being said, there's been three developments. First has to do with insider buying. We have corporate insiders, the officers of some companies that have to report their securities transactions. We've seen them buying more stock than they've bought in a long time. Furthermore, in May, first time since the pandemic began, we've seen more buyers buy insiders than sellers. And that's a significant and a positive development. In addition to that, Warren Buffett, he's buying again. And he was reported by the Wall Street Journal in May to be buying lots and lots of shares of stock. And the question becomes, why are they buying? They're buying for the simple reason that the valuations of the shares are really pretty good. They're attractive again. They're a good buy. So with that in mind, we've had a lot of clients adding money to accounts. And we will continue to take advantage of these times by looking for selective opportunities to rebalance, which we've been doing a lot of that during this time period. The third development has to do with inflation itself and is related to the money supply. There is only one cause of inflation, and it is the amount of money in the system. And what simply has happened is our country printed too much money, which is what caused the inflation that we're all suffering from. But the measures that are being taken by our central bank are starting to show some progress, as we saw 3 consecutive months of some of the reduction in the annualized growth of the money supply, and it really was pretty sharp on the last one. We get the next report in a couple of weeks, and hopefully the progress continues. I'm optimistic about this one. We've dealt with inflation in this country in the past, and I believe we're going to deal with it again quite well this time as well. So what's next? Well, what's next begins with, while this is going on and investors are sorting these things out and news is reporting like it is, the stock market itself, the equity market, will go down, quite frankly, until it stops going down. But when it stops going down, it will turn around and its trajectory will change to up, and the velocity of its uptick will mirror that of its downturn. It always does. So until then, we'll be disciplined. We encourage you to keep your discipline. Like we said, we're rebalancing a number of accounts. Most of us are likely to come out of this time owning more shares at better prices than we entered into this downturn with. So if you have any questions, we encourage you to call. We very much appreciate the opportunity to serve you. And until next time, thank you.